Here's what you need to know about mortgage loan officers. Most of us are 100% commission. That's not necessarily a bad thing because, for example, if they're dedicated and hardworking, you'll be able to get a hold of them on your time. If your schedule is such that 9 to 5, Monday through Friday just doesn't work for you, weekends and evenings are fine. However, like any profession that's based on commission and with lots of competition, there will be some people that choose to separate themselves through tricks and bait and switch rather than great customer service, transparency, and honesty, specifically in the pre-approval process. So how do they do this and how can you avoid it? Here are some of the tricks. When quoting costs, they only quote their costs or their origination fee, which all lenders have, knowing full well that there's a lot more in costs, including third-party fees. The lender shouldn't expect you to know what these fees are. The reality is the lender won't know the exact amount of many of those fees, but they'll have a good idea, unless they're extremely inexperienced. My goal is for my clients to have a real good estimate of everything involved, so they know how much money they need to budget for closing day. Now, some lenders may intentionally lowball those third-party fees. A big area that some of these lenders will also lowball is property taxes and home insurance. The reason they do this is it lowers not only your cash to close, but also your monthly payment. The reality is the lender has no control over either taxes or insurance. Another trick is to show you closing on the last day of the month, so you only pay 1 day of interest. Remember, you pay interest for the remaining days of the month you close in. So if you're doing a comparison, and one person puts the last day of the month as the closing day, and the other shows middle of the month, the one looks better on paper that has you closing at the end of the month. But the reality is nobody knows yet what day you're closing. Also keep in mind, this doesn't necessarily mean it's better to close the last day of the month because your first payment is due sooner. For example, if you close June 1st, your first payment can be due August 1st, 2 months away. But you paid 30 days of interest at closing. If you close June 30th, you only pay 1 day of interest at closing, but your first payment is still due August 1st, only 1 month away. Another trick at that pre-approval stage is to either lowball the rate or don't include the fact that it's costing points to get that rate. We don't know what the rate will be at that pre-approval stage. We could quote you a rate and it could literally change 30 minutes later, but we do know the rate that day. If 30 days later you find a home and get an accepted offer, we quote you the rate again at that time. The last several years have been crazy with rates. And there have been occasions where I pre-approved clients at the current rate, and by the time they were under contract to buy a home, the rate was either considerably higher or in some cases lower. It sucks for everybody, but we can't control that. What we can control is giving you the actual rate at any given time, not purposely lowballing it. Having said all that, I'm a positive person. I still believe there are plenty of lenders that still operate with honesty and integrity. When you get pre-approved, you should get a full breakdown estimate worksheet like the one I've attached. If you're not getting this, ask for it. If there's any hesitancy or you're starting to get some weird vibes, talk to another lender. If you want me to look over, I'm more than willing to do so just so you can have peace of mind that you've got yourself a good lender. Please like and subscribe and happy house hunting. Thanks.